Bosh, how's it going, everybody? My name's TradeX, this is my trading den, and today we're going to talk about the ultimate guide to the A+ 2022 model entry, okay? This isn't going to be a regurgitated episode of ICTs. It's also not just going to be a pretty picture, which you'll often see on Twitter, which holds no context or value. Today, what we're going to do is go through the secret sauce. Nothing held back. We're going to go through the pure juice, the context that surrounds a 2022 model, higher time frame analysis, what it looks like, and then we're also going to talk about how to execute it, how to get in, how to get out. Nothing held back, pure juice. So guys, if you want to learn how to trade the 2022 model correctly, let's get this intro rolling, then we'll jump straight into the good stuff. See you on the other side. Okay guys, let's jump into the secret sauce. In order to get an A+ 2022 model, we have to do the following. We have to put context around the model. We will get to a 2022 model, but guys, we have to get to the secret sauce. This is the bit you're missing. This is why you're not trading them effectively. Okay, so first and foremost, we're gonna look at the higher time frame, the daily, then we'll look at the hourly, then we'll get down to the execution chart on the 1 minute. Okay, so guys, stay patient, but this is what you need to know. Okay, first and foremost, we want to know if we are looking for a bearish example, and today we're going to be looking at a bearish 2022, but just flip it for bullish, we need to know that we are inside of a higher time frame premium. So if we just take a range across what we're currently in, this is the wider range that we're in. Okay, so we can clarify that we are inside of an optimum trade entry. We are inside of a premium optimum trade entry. So would we not be expecting price to respect high time frame levels inside of this for us to look for a 2022 model entry? Well, we can look at the higher time frame, we can jump up to the monthly and look inside of this OTE for potential levels where price is likely to respect. Well, who can tell me what this big down close candle is here? This is a bearish order block. So would it not make sense to reference that level on your chart? And this is not hindsight trading, guys, because we traded this inside red pill and we went heavy. Okay, but this is why we went heavy. Context, secret sauce, not just a pretty picture on Twitter. Okay, so we know we're in a premium and we know we've got this higher time frame level of this bearish order block, waiting for price to reach that level to anticipate a 2022 model or another entry model to form. Okay, now we can look at the H1 and bear in mind this hadn't been printed at this time. But what did we have? We're going to delineate this across our charts. We had buy side pooling just below this bearish order block on the higher time frame, this bearish monthly order block. Okay, we could therefore anticipate price to drive to take out this buy side, run into that level before aggressively displacing lower. Okay, context, guys, context. Now let's jump onto the lower time frame and start breaking this down further. For those of you who know my project entry techniques, volume 1, and you have read it, you'll know that this is a New York AM session reversal. If you've not seen that, guys, I'll put it in the show notes. Make sure you read it because this is the secret sauce, the gold that you're missing. So this is a New York AM session reversal. Okay, so we are already anticipating price to pull back into this range. Okay, we've had this price moving up into the New York AM session, but I'm not going to break down the technicalities of a New York AM session reversal. You have all of my documents and my notes that you can review at a later date. And if you have any questions, feel free to reach out, but this is 2022 model focused. Now, during the New York AM session, we're already anticipating a retracement. So guys, again, context, okay? Higher time frame premium, monthly bearish order block, expecting price to retrace during the New York AM session reversal. Context, all right? Okay, so now we can start waiting and anticipating for a 2022 model to form. And if we do see it form, this is when we can be aggressive because we have the context in which we are anticipating a 2022 model to form. This is an A+ setup, okay? Now, what we have here is buy side liquidity, all right? This is the buy side, and this is where we start marking out and waiting for price to deliver the 2022 model. We're looking for price to reach that higher time frame target inside of a premium, the bearish monthly order block. The price aggressively displaces lower, and then we get a market structure shift. Okay, this is now giving you the framework for trading it. What we're then looking for is price to return up into an OT or a premium of the displacement leg after the market structure shift. And inside of that premium, we are looking for a fair value gap to frame an entry off. Okay, well, this is a 1 minute SIBI, sell side imbalance, buy side inefficiency inside of this premium. Now, would this not make sense to be an entry to go short using a 2022 model as your entry technique? Well, the answer would be yes. Okay, so we can now frame our entry short here. We have our stop above this high. Now, it's all well and good getting into our trade, but again, context. How do we get out of this trade? Okay, where do we manage our positions? Okay, now, first and foremost, again, coming down to context. What do we know about a New York AM session reversal? We know that we can look for equilibrium of this range for price to retrace back into. So immediately I'll be looking at this as my low hanging fruit objective. And what we're going to go through is from a novice all the way through to a professional trader's viewpoint. Okay, so that would be someone who understands a New York AM session reversal as a price target. But what you could do is, as a complete newbie, if you get in on a 2022, you can literally take the equilibrium of this range, search for a PD array within inside that, and that would be your low hanging fruit. Okay, so what we can do is look at equilibrium of this range. That would be your target if you were a newbie trader, right? There's nothing wrong with that, but we can make this as advanced as you want it to be. Okay, this would be where you would look to start taking off your exits using the 2022 model as an entry. Now, how can we develop this further? How can we develop this further? Well, we can look at this entire range, and look for liquidity inside of an OTE. Well, we had this swing low, which formed here. This would make sense to frame an entry for another partial, okay? All right. And there is one further step we can take, and that is with the New York AM session reversal, we anticipate price to run the sell side liquidity below the Asia low. Okay, and if you have all those documents, and I'll put it in the show notes if you want to review later. How can we then look for a target below this sell side that is highly accurate? Well, this is where we can start applying standard deviations on this retracement leg back up into this fair value gap using this 2022 model. Okay, this is advanced, guys. This is the secret sauce. This is the juice. Okay, that you're not getting in Twitter on those pretty little pictures, right? That holds no value and no context. So this is one-time standard deviation. Why X are you using one-time standard deviation? Well, because it is the first standard deviation that is below this sell side liquidity. That is why I'm using one-time standard deviation versus 1.5 or 0.5. It's the first below this Asia low. So guys, this now becomes where I'm looking to take my terminus off. All right, this is my terminus. Okay, so now we've just gone from a newbie to a novice to an intermediate to a professional trader's trade. Okay, so I'm just going to get rid of the newbie because it doesn't need to be there for the premise of what I'm about to talk about next. And this is trade management. Okay, and this is highly important because let's say we all take 3 contracts and we place our stop here. This is the difference between a novice and an experienced trader, and the difference between a 2-tick Terry and someone who, range trades and takes 5,000-6,000 versus $80. Okay, and this is it. So what I'm looking to do is then manage my positions off at those targets. So I'll be looking to take 1 contract off at this partial, 1 contract off at this partial, and 1 contract off at this terminus point. Okay, now it's important to pay the trader on the way. Okay, what a lot of people do is they'll get in, they won't take any partials, price will trace on them, and this is where they'll get out because they don't want price to retrace on them, and so they get stopped out. This is 2-tick Terry land, and they get out for $80 even though they were in the right side of the trade. Okay, this is effective trade management. Do not overlook trade management. And guys, if you want to learn how to do trade management, I've done a masterclass on it. I'll put a comment card top right, and I'll also put a video at the end so you guys can watch that, which goes through exactly how I manage a trade. But essentially, you would be looking to trade this to terminus, right? So you're anticipating price is likely to pull back on your position to offset accumulate. Okay, so offset accumulation is when market makers will run buy side liquidity to offset those who are in the position but accumulate that liquidity, so accumulate those who are getting out of this position. So I dubbed something called lamb to slaughter, and lamb to slaughter is essentially where I keep 1 contract back and I don't move it until it runs to terminus. So I took a contract off here, I took a contract off here, and my last partial or my last contract stays at stop, because I'm anticipating price to run on my position. Why? Because market makers don't want you to capture the entire range. They're okay with you taking small ranges because they can't kill the goose that lays the golden egg, but they certainly don't want you winning big. So I'm anticipating offset accumulation, so I'll always keep one contract back if I'm anticipating price to capture an entire daily range. This is context, guys. All of this that we're going through today is context. New York AM session reversal combined with a higher time frame target in a premium using a 2022 model, framing off partials. Now, guys, this is a lengthy trade. Okay, say you got in here. I got in up here, by the way, in red pill. You could have re-entered here using the 2022. I do like to get in aggressively, and I got in aggressively up here. But regardless, if you got in on the 2022 model entry, this all the way to terminus is a 5-hour trade, right? So when price eventually reached the final terminus, is a 5-hour trade. So again, this isn't the Twitter sped up video, which is, we're, this trade in little 30-second bullet points with some sexy music in the background, right? That isn't sexy. This is sexy, right? Holding a trade, capturing the daily range, okay? And this is using a 2022 model as the entry technique. So we had the buy side, price ran into the higher time frame bearish order block inside of a higher time frame premium during the New York AM session, expecting a New York AM session reversal. We get the market structure shift. Price returns up into the fair value gap inside of a premium, inside of the OTE. We enter and we manage our position, first taking off 50% of this previous displacement leg. Then we're looking at the liquidity below this pivot low. Then we are targeting the final terminus, which is liquidity below the Asia low. This is the A+ and A+ 2022 model. So guys, I hope you found this video useful. If you did, please do consider smashing the like and subscribe. And until next time, trade safe, trade smart. And I'll see you on the next one. Peace!